Everyone, and welcome to the 15th meeting in 2013 of the Finance Committee of the Scottish Parliament. Could I first of all please remind everyone present to turn off any mobile phones, tablets or other electronic devices. We have received apologies this morning from Michael McMahon, and also committee members and others may note that the clerk for today's meeting is Eugene Windsor. Jim Johnson, our usual clerk, is unavailable as his wife Emma gave birth to a daughter, Alice, last week, who came in at a whopping £9 8 ounces and will be a very noisy sister to young Lucy. So just like to wish Jim and his wife Emma and his whole family all the best at this time. The first item on our agenda today is to decide whether to take item 3 in private. Are members agreed? Members are agreed. And the second item on our agenda is to take evidence on the Land and Buildings Transaction Tax Scotland Bill from Alan Barr of ICAS, David Melhuish of the Scottish Property Federation, Isabel de Inverno of the Law Society of Scotland, and Stephen Colclough of the Chartered Institute of Taxation. I'd like to welcome the witnesses this morning and invite one of them to make a short opening statement. You can toss a coin if you like.
I'm Isabel Dunverno, convener of the Tax Committee of the Law Society of Scotland. Delighted to be here to give further evidence about the Land and Buildings Transaction Tax in relation to leases and partnerships. We've been working with the Bill team on the lease, the non-residential lease stakeholder group, and we're pleased that that work is coming to fruition in the form of an amendment to the bill, which will come before you shortly. So we've found the interaction with the bill team through that stakeholder group, and indeed in other aspects, to have been very helpful, and that a lot of our comments have been taken on board, and so we're pleased with the way things have gone, and we're hoping that as a result of all this, certainly in relation to leases, the LBTT provisions will be a lot simpler and easier to operate than the SDLT provisions, and more in keeping with Scots law.
Any further opening comments?
I'm Alan Barr, and although I'm here representing ICAS because I serve on one of their capital tax committees, I'm a lawyer by trade, although I'm here with my ICAS representative hat on today. The Institute of Chartered Accountants has contributed into a lot of, in Scotland, has contributed into the tax process more generally, and also made written submissions in relation to this bill in particular. I think all I'd like to say is it's going to draw attention to some of the general comments made that remain valid through the process, and indeed perhaps are becoming more valid. That one of the great drives was the new Scottish tax legislation, of which this is the first example, provide an opportunity to avoid complexity, to simplify and to modernise the tax system. There is, while I agree entirely with what Isabel said, I've been working on some of the same committees as her with the Bill team. What has also been demonstrated is that this is very hard stuff to do, and very hard stuff to do properly. And it is at the moment, I think, debatable whether in fact enough time is being devoted to the legislation in order to try and get it right and to meet that need to bring it into line with Scottish law and practices. I think that there is still a considerable danger of things going through because they have to go through, rather than taking enough time to make them go through more correctly and more properly, given that the tax is not to be introduced until April 2015. And I hope that the Parliament generally will take the opportunity of the time in between to realise that if things need to be changed, they need to be changed. It would be better not to go with what we have got and to change it to work better before the system actually comes in. Because I do think that we're running up against timescales that make it extremely difficult to get all of the things right. The specific subjects of today of leases and partnerships and indeed trusts, which was another one, are absolutely prime examples of this. You haven't got the legislation on leases yet. It was not in the original bill. The same applies to partnerships, but at the moment all that we have is a straight reproduction of very extensive, incredibly complex UK legislation, which, in the views of people working with it, doesn't work in many ways. And that's what we've got at the moment. And to get all of that right in the timescale that you've set yourselves, I think is extremely difficult and maybe impossible.
Well, on that cheery note, Mr. Melhuish.
Just very briefly, I would endorse the statements from two colleagues that just had in terms of fairness, and I think there's also a very good point that Alan Barr has made about taking the time to get the bill as good as it possibly could be in the time frame available. The only addition I would make on behalf of Scottish Property Federation, where our particular interest, as my written note I think said, was in the leases aspect of today's evidence, was really to add the theme of competitiveness, which is very important to our industry and those who will lease properties from them.
Thank you. Mr. Colcliffe, is there anything you wish to say?
Yes, please. Thank you very much, Mr. Convener. Since I last appeared before you, I've moved from Deputy President to President of the CIOT, but that's not the capacity I'm in today. It's because stamp duty land tax is one of my specialist areas. Wearing another hat, I have been working with the Bill team on the partnerships provisions. As they currently are drafted, they are very similar to the UK ones, extremely complex. Due to the absence of the specific anti-avoidance provision, which is in stamp duty land tax, there are planning opportunities available which really should not be there. We have had a lot of discussions with the Bill team on this, and I would urge that the recommendations made there be taken. And I'd reiterate what I said in January. You've got a great opportunity here to try and make a tax which is simpler and easier than what you've got already, conforms to Scottish law, and is something that can be run going forward at a relatively low cost, both to government and the taxpayers.
Okay, thank you very much. We'll explore some of the comments that you've actually made earlier on, but first of all I want to make it clear that the committee is really appreciative of all the work that yourselves and your organisation have done in terms of taking this bill forward to this stage. We clearly could not have done it without your expertise. Now, I'm going to ask questions of the panel generally, but not all of you will have to answer each of the questions. Answer questions you feel free. One or two might direct to individuals, and of course I'll let colleagues in, and I might do some further questioning later on, depending how things progress and the time we have left. But comments in terms of the of Scots law have been mentioned. And we had the Bill team in before you, and some of the comments that I've made, they've actually given some of the information to the committee in private. I'm just wondering what your views are in terms of the designation as far as practical to reflect Scots law and practice. I mean, Isabel, we've touched on this already, and indeed so has Stephen, about problems in leases in Scotland because the SDLT lease code is based on English law. How far do you feel that we've gone in terms of being able to address this? And do you think that in terms of the relationships between Scots law and practices and the bill, we've got it just about right without having to do a huge number of amendments which may have unintended consequences?
I think in relation to leases, based on the sort of drafts of the proposed lease schedule that we've been looking at with the Bill team, it probably is most of the way there. Obviously that was a draft, and so one would have to wait to see the actual amendment, because you know, this is, as Alan said, tricky stuff. So you know, it's a question of whether the actual words on the page will work in the way that's intended. But assuming that all the sort of points that have been discussed and so on are reflected, then I think it is most of the way there. I would suggest that there will be still, with the best will in the world, some glitches that ought to be fixed, and I would endorse Alan's comments of the sort of need to take time in the 2 years up to 2015 to get some of those fixed. But certainly the draft that we've seen much better reflects the reality of how leases work in Scotland than the SDLT legislation.
Yes, I mean, in the previous kind of private session, there was an indication that what would be ongoing in terms of further honing the bill as we move forward beyond its passage to address some of the issues which have been raised. Now, of course, one of the main issues is, of course, the option for the calculation of LBTT, and we know that there are 5 options, and we have a paper which mentions that. I'm just wondering, in terms of the public record, I wonder if you can take us through these options and explain why option 3 was the one that was chosen.
Well, one of the options, I'm afraid I can't remember what the numbering of them all was, but the option of just keeping SDLT, the SDLT system as it was, I think we rejected because the way in which SDLT works for leases is terrifically complicated. People waste a lot of time trying to figure out how to apply the legislation, and it works particularly badly for Scottish leases because we can vary leases in ways that you can't do with English leases, and the treatment of extensions of leases, for example, is just not dealt with at all in the SDLT legislation, and we had to agree a sort of working practice with HMRC. So all of these things meant that just the status quo is not a good plan. In terms of the other options, one of them, which was quite attractive to the Law Society certainly, was just having LBTT based on a percentage of the rent actually paid. The idea there being that it was very simple and it wouldn't be difficult to find out what the rent actually paid was. However, on further consideration, a number of issues emerged. One of them was the need for people to do lots of returns, and that would be administratively cumbersome. Secondly was the fact that the tax authority might have difficulties actually getting the LBTT from the tenants, because it would be over a long period of time rather than a one-off sort of payment at the beginning. And also there was the question of moving from the MPV-based system that we currently have to a paying on an annual basis system, and that there would be a cash flow issue for the Scottish Government in moving from one to the other. So for all of these reasons, I think it was accepted that LBTT as a percentage of the rent was not probably the best way forward. I think some of the other MPV-based options were sort of variations on a theme. So, you know, having an MPV based calculation, but then paying it in installments is, you know, that's just when you actually pay it. But I think the reason that we fixed on the using the MPV calculation, but recalculating periodically, just means that it's a lot simpler than dealing with the various rules that you have at the minute in SDLT for a variation of a lease to increase the rent is treated as the grant of a new lease. So, you know, you can have lots of new leases floating around in SDLT land, whereas in the real world you've just got one lease. So I think the idea of moving to an MPV calculation which you recalculate just means that you can do what happens in reality. The tenant takes a lease. You know, the rent might be changed, the term might be extended, and all these kind of things. A lease is a moving target, really. The problem with SDLT is it tries to take a snapshot of it at the beginning, and then it says, oh yes, but that picture might not be right, so therefore we must have lots of hoops that you must jump through to try and amend your picture to take into account what's happening later, whereas you kind of need a video. So the MPV being recalculated is trying to achieve that. So at the end of the day, when you've got to the end of the lease and you've done the 3-year returns as the tenant, you actually should have paid LBTT on the actual rents. That's the aim of it.
Okay, thank you. Anyone get any further comments on that particular issue? Alan?
I would endorse that where we have got to is better than where we are. I was this is personally rather than for ICAS, so the simplicity of it for ICAS, the principle of that would suit ICAS. I was more fundamentalist and thought that actually paying on what rent had been paid, if necessary on an annual basis, made sense. But where we have got to is a revision, and I just endorse absolutely what Isabel says. The problem is this snapshot. LBTT wants to capture a tax on a transaction that by its very nature is ongoing for 25 or 10, 25, or could be, in theory, up to 175 years. And that's a very hard thing to do. I think that again, we only saw the changes yesterday, or the proposed changes, and indeed have had some further input to them. I think they are a good move towards where we would want to go, but one should not underestimate the complexity that still remains. It will still be necessary, and indeed more necessary than under SDLT, to, on a more formal and regular basis, to go back and revise what has gone before. The proposal is that this should be based on the rules and rates in force at the time that the lease commenced. So that means that the recalculation is going to involve a combination of the past, what's actually happened since either the lease began or the last 3-year review, and what is still to happen in the lease into the future, because rents may have changed or may yet change in future. So there's still going to be a significant amount of estimating and the like going on. And the practicalities of it are, those much more expert in the computer systems than I tell me that it will be very possible to produce an online calculator to do this readily, certainly more readily than one could do with bits of paper and scratching of heads. But that will be quite a complicated calculator that is required for that, and it won't now just mirror the current calculator that's in use for SDLT. And I think it will need to be an online calculator rather than having it done, as it were, without the aid of such tools by the taxpayer or his or her agents. So I think it's an improvement, but I don't, again, particularly from the complexity point of view, I don't think we're there yet. If I could just take the opportunity as we to mention 2 more fundamental points that I don't think are addressed in what we're getting, and again, in a way reflects Scottish-English differences. The date of commencement of a lease, and therefore the duration of how long a lease lasts, are quite nebulous concepts. There are a number of different days that you could say that the lease commenced. You know, the last signature on a bit of paper is one, but also entry into the property is another, and the link between these two are complicated. Now that at the moment is not dealt with very specifically. In a way, I don't really much care which is set down, but something needs to be set down about when this happens. And the second general point, just to make, and again on what we have seen, part of it goes back to what I was saying about the length of and difficulty of the process. A lot of the terminology in leases is not in SDLT and was not in the original draft in terms of just basic Scots terminology. It refers to lessees, for instance, whereas the Scottish word, both technical and otherwise, is tenant, and tenant is used throughout. And that involves, in my view, wholly unnecessarily, a lot of changes that have to be made when there are a lot more fundamental things that the time could be devoted to, as, for instance, the date when a lease commences as a major fundamental.
That's a good point. I'll certainly put that to Cabinet Secretary when he speaks.
I wonder if I could just add one point, yeah, which is really that as well as the words on the page actually reflecting what we discussed, we also need to be sure that, as Alan said, that the computer systems will deal with the mechanisms adequately, and that's really important because if the computer system, the online system, is easy to use, then it will be easy for tenants to, or their advisors, and obviously a lot of LBTT returns will be done by solicitors. But if that is easy to use, then that will make a huge difference. If it's not easy to use, then there will be problems. But that's something for the future. But I hope it's something that this committee can pay heed to once the system has been developed and so on.
Yes, the bill team has told us that taxpayers will have access to an online calculator to assist them with the NPV calculation. We have a kind of very interesting mathematical demonstration of what that shall be, which involves NPV equals N over sigma, I equals 1, and R over I with 1 plus T to the power I, etc. But we won't go into that at the moment. What I will do though is I'm just going to switch a wee bit to talk about sub-sale relief. Stephen, in your own paper, you say that the LBTT bill contains no sub-sale relief. As the Law Society of Scotland said, and the CIOT agrees this is a mistake. And then you go on to say that taxpayers should have a choice to use sub-sale relief or another relief or provision which reduces the amount of duty payable, but not both. It is a combination of sub-sale relief with another relief which has led to avoidance. I'm just wondering how your view would work in practice in terms of the choice to use a sub-sale relief or another relief or provision to reduce that amount payable, but not both. I'm just wondering how it would work in practice.
Thank you for asking. I mean, this follows up on the conversation we had in January. With sub-sale relief, there are always going to be at least three parties. There's going to be the original vendor, the purchaser in the middle, and the final purchaser. And it is possible to have a circumstance where the original vendor doesn't know about the final purchaser, and the final purchaser doesn't know about the original vendor. So the original vendor doesn't really matter, doesn't affect him. The people it affects is the intermediate purchaser, who is also a vendor, and the final purchaser. I would expect a purchaser who is expecting to claim a relief, so say a charity, or a purchaser who's, for whatever reason, is claiming a reduced amount of tax because, for example, it's taken advantage of the partnership provisions in Schedule 17. If you are a purchaser, a final purchaser, planning to take advantage of that, an inquiry to ask of the person selling to you would be, please confirm you're not taking advantage of sub-sale relief. Now, if they can't give that confirmation, then there has to be a conversation between the intermediate purchaser and the purchaser saying, well, hang on, if you are taking sub-sale relief, we need to have a discussion, and it'll be partly a discussion about price as to whether I claim my relief, charity's relief or whatever, or you claim sub-sale relief. Now, I'd expect 99 times out of 100, it's going to be more value to the final purchaser than to the intermediate purchaser, although one can envisage cases where it will be better for the intermediate purchaser to claim the relief. But there needs to be, if you like, a grown-up conversation and part of the negotiation presented from that initial statement saying, look, I am a charity, I will be claiming charity's relief. Please confirm you're not claiming sub-sale relief. And the way the sub-sale relief works at the moment in SDLT, it can only apply if basically the completion of the property transactions, both of them, happens on the same day. So you don't have at the moment SDLT a case where the first leg can complete and the second leg completes years later. It all happens on the same day. So there will be that visibility, or should be that visibility, through the return process to see that the same property has gone A to B to C on the same day. So that should not be beyond the wit of man to pick that one up, even through just exception reports on an automated system. But before then, as I say, final purchaser, intermediate purchaser would need to have a negotiation about who's going to claim which relief. I think at the moment there are, one of the popularities of sub-sale relief planning in the UK generally has been that you can do it without the vendor knowing. So the vendor thinks you're paying 100 plus 4% duty or 5% duty, but in reality you're not. So the vendor will be taking into account that you're having to pay an extra slug of tax on top, and that will go into the price calculation. So they think, oh yes, he's really paying 104, we get 100, the taxman gets 4. Then what happens is the purchaser does a sub-sale without the vendor knowing, and that 4 disappears and he pockets the savings. Okay,
so we need transparency in terms of this process then?
It's no more transparency than you would get through any inquiries you make on a building as to its status, its survey, its environmental condition, tenants that are already in there. Those sort of inquiries, that sort of information you'd have to ask and examine anyway. This is one extra thing you'd ask, which is, are you intending to claim sub-sale relief?
Okay. I think colleagues around the table will probably explore that issue further. I just want to, given the time is marching on, I want to allow colleagues in, so I'm just going to ask one other question, which is about partnerships, since this is the other kind of issue which you've all touched on in terms of your papers. And again, I'll turn to yourself, Stephen, where you say there's a question over a transfer in a partnership, which is an interest in a partnership which in turn owns land in Scotland. Is such a transfer liable to LBTT and or entitled to special provisions in Schedule 17 of the Act? And you say that it should be yes. You say that we think the Scottish Government has implicitly accepted that a transfer of a partner does not give rise to tax. I'm just wondering if you can talk a wee bit more about the whole issue of partnerships and where we should go from here in terms of that. And also, just for clarification, you've said in 2.4 of your paper, which is something which has mystified me and possibly other colleagues, where it says there is no LBTT equivalent of SS 75A-75C FA 2003. So I wonder if you can actually tell us a wee bit more about what that is.
I certainly can.
I personally am baffled by it. Okay,
and referring back to what I said in January, I would advise all members to take 2 Nurofen before we start this conversation. Picking up on the multi-tiered point in para 2.2, the SDLT rules at the moment say that you look through all partnerships to the partners. And the wording is not clear whether that means you go just one level through the partnership that owns land, but if one of the partners themselves are a partnership, whether you go up to the partner at the top. Now, if that partner's a company, everybody accepts that if the company's sold, there's no tax at all. We can't deal with that. But the question is, if that top partner sells his interest in a partnership, which has an interest in a partnership, which owns land in Scotland, do you want the tax? Now, the current position in SDLT is HMRC will say, yes, we want the tax. But when you ask them about the same provision and say, does that mean we can pay a lower rate of tax under the partnership schedule? The answer is no. So you have the same words in the same provision, and HMRC's answer is yes if they want the tax, but no if you want a reduced amount of tax. And what I'm saying is, please nail your colours to one mast. Either say yes or no. My advice would be to say yes, which means that the provisions of Schedule 17 in Parts 4, 5 and 6 would apply all the way up the tier of partnerships, but similarly, as would the charge to tax. So are you with me so far?
So far.
Okay, that's that point. My advice would be to say yes, we look all the way through for all purposes, and be clear about that. I don't think you need to change the wording of the bill. You just need to be clear in your published policy that that is your view and that's what you think the law says. Whereas the position we have at the moment in the UK is that the answer to the question depends on the question you're asking, and that is not acceptable because you're basically creating uncertainty and giving power to the executive rather than to Parliament. Now, on 2.4, sections 75A to 75C are a targeted anti-avoidance rule aimed at stopping avoidance in stamp duty land tax. And in summary, what it does is says, if you've got a series of transactions, let's start with who had the land first. Let's look at who's got the land at the end, and imagine a notional transaction from the one at the beginning to the one at the end for all the money that's flowed between them. Multiply that by the rate of duty. If that is more than the duty actually paid, we'll have the duty. So it's a kind of a general provision like that. Now, that provision came in 2006. And when it originally came in, it said in computing the rules for section 75A to 75C, you could take account of what you've got as Schedule 17, Parts 4, 5 and 6. Now that meant that certain planning schemes were still available, could still be carried out, notwithstanding this targeted anti-avoidance rule, because this targeted anti-avoidance rule allowed for the provisions in what you've got in Schedules 17, Parts 4, 5 and 6. Now that was countered in stamp duty land tax by saying, right, for the purposes of this anti-avoidance rule, you can't rely on Schedule 17, Schedule 15 in UK, Schedule 17 in your bill. And that's the way it was stopped. It was stopped because now that anti-avoidance provision, as amended in 2010, stops that kind of planning. You don't have that anti-avoidance provision in your bill at all. So effectively what you're implementing in Schedule 17 is the pre-2010 version of SDLT partnership rules. And that means that there are a number of planning opportunities available in certain circumstances that you are basically saying help yourself to. What we've done in Para 2.4 is repeated what we said to the UK government in 2010, that in fact the best way to deal with this, because these particular schemes rely on creating what HMRC call contrived connections, i.e. making the seller and the buyer connected for tax purposes through contrived means. And the way we think to deal with that, and the way we suggested to the HMRC in 2010 to deal with that, would be to say that you can only take advantage of those connection rules that are in Schedule 17 if you have been connected not at the time of the transaction, but at the time of the transaction and the entire 12-month period before that. Because in reality, if I want to sell a property, I'm not going to hang around for 12 months waiting for a planning scheme to mature so that the purchaser can save money. I want to sell a building, and if he says, oh, to save 4%, can we wait 12 months? I'm going to say, no, I've got a better offer over here.
Okay, thank you very much. David, just oh, sorry, Alan, I'll turn to David and then yourself, Alan, sorry, because just I was going to mention about what David said here. David just said, in terms of partnerships, it would appear to be a missed opportunity if we don't clarify the law relating to LBTT and partnerships. It was just to ask you to expand on that a wee bit, and then I'll let Alan in.
Yeah, I mean, partly it was in, I was just comparing it to the constructive engagement that's gone on the leases side of things and how the government has worked that through, and we're now at a position where something detailed will be seen on the face of the bill and come through. With partnerships, I just felt that it hadn't quite had the same attention to date, and I think for the reasons we've just heard, I think it would certainly be a missed opportunity if we didn't get something as clear as possible into the bill before it finishes stage 3. And I mean, touching on some of the comments made right at the beginning by Alan Barr, it just feels to me that it's another area where if there was just a few more months' time even, the officials would have had a chance to work things up further, come before the Parliament again after further deliberations with the kind of expertise which you're hearing from here today. So I think that one of the problems with SDLT is that it's something that was built on and built on and built on in legislation of 03, 04, 07, 10, 13 this year again, and that does not make for good legislation.
Yes, indeed. All the papers talk about this, Alan.
I'm going to urge you to be much more radical than Stephen. The partnership legislation in SDLT, which is essentially what you have in the bill, as Stephen says, at a particular point of its evolution, is a disgrace. It is completely lacking in comprehension for people who've worked in it for many years, including those in HMRC in many cases. It does not work. It is ignored in many cases because people don't know that there's a potential liability when transactions happen. I urge you strongly to start again, not to try and build on what is there, but over the time that you've got available to start completely again with the partnership rules, and to move to a both simpler, to stick in one of the themes, but also effective means of dealing with transactions through partnerships. You have a Scottish speciality opportunity. Scottish partnerships are different from those in England and Wales. They are a separate legal person, though that is often a distinction without a difference, particularly in tax terms. And I think that to try and work with the existing schedules, Schedule 15/17, is working with an entirely broken toy. And you should start an attempt to start with a completely new system for partnerships. I also think that the way that things are happening in the parliamentary process with it at the moment is unfortunate in that it has come forward, as I say, essentially as a cut and paste from SDLT, and the time available to change that before things go through this year is simply not available. The other alternative, an entirely reasonable alternative in my view, would simply be to take it out entirely with the acknowledgement that before that time, via the Taxes Management Act or secondary legislation, you need to bring back in its replacement. But otherwise, I regard this as a huge opportunity missed to deal with some of the most complex and incomprehensible legislation, and there's a plenty of competitors in that in the UK tax legislative system, but this is one of the absolute top dogs. Well, here's a chance. You're either going to reproduce a version of it or you can do something different and better. And I urge you strongly to do something different and better.
I'll certainly be putting that to the Cabinet Secretary at the next session. I mean, Isabel, you've mentioned that you said a working party should be established to consider LBTT and partnerships in more detail over the coming months.
Absolutely. I think Alan was quite right to say that it really is a disgrace. It is a dog, as he mentioned. It offends against all the principles of Adam Smith that have been mentioned by the Cabinet Secretary. I think Stephen's earlier answer in response to your question is an excellent illustration of how complicated it is and people cannot understand it. Admittedly, it has to deal with a wide range of different partnerships, from big funds set up through partnership vehicles to family partnerships, farming partnerships. There's a range of different things, but it is, as Alan said, often ignored because people don't understand it, and it really does need to be looked at again. The fact that partnerships have been used a lot for tax avoidance needs to be borne in mind. But in reality, that one of the points we mentioned was that SDLT partnership rules are based on income sharing ratios. People find that so difficult to understand because in real partnerships, in the real world, you have income profit sharing ratios and you also have capital sharing ratios, which are different. So you're automatically off on the wrong foot. You're in Alice in Wonderland, trying to sort of work out how the partnership rules apply. So that's not a good state of affairs. But it isn't the simplest thing to try and figure out how to sort it out. I mean, I think in the time scale that we've had, it wouldn't have been possible. So I would certainly recommend, as Alan has suggested, deleting it and setting up a working party to make a better and more appropriate partnership code.
If I could just add, although it is horrendously complicated, the principle, starting point, and the Scottish Parliament is rightly a great believer in principles in legislation, is that transfers of economic value of land and buildings through partnership should be treated no better nor worse than the same transfers done directly. That, if you like, is the principle. And now, applying that principle through the complication of the legislation that we have got is, as say, in my view, failed pretty well utterly. But that's the principle. And if you start from that principle and not from what you've got already, then we have every chance of getting to a system that does embrace that principle.
Thank you very much. I'm going to open the session out now to colleagues, and the first person to ask questions will be the Deputy Convener, John Mason.
Thanks, Convener. I suppose, Mr Barr, I was just wanting to press you on this whole thing about timescales. I mean, we've got the ICAS, and I have to say I'm a member of ICAS. We have their paper which suggests we want decisions made quicker, and particularly that's in relation to the bands and the rates, where the Cabinet Secretary has said he's going to announce them nearer the time, and we've had, I think, yourselves and others saying that you want them sooner. But now you seem to be saying that you really want us to just put this whole process on hold and go away and write some completely new legislation, which therefore would not be ready until very close to the date. So can you explain how we're looking at this?
No, I appreciate there is a dichotomy between them. I mean, in ICAS's view on rates, I think this is as much for commercial certainty as anything, to get an indication of rates. I, however, individually fully understand, we do not know what the rates of SDLT will be in April 2015 and may not know that, well, perhaps before December 2014. So I can understand that specifically. I think that the difference, however, is in the form of the legislation itself. It's not on the fundamentals of it. It is a need to concentrate on the details by such means as working parties, if necessary, by schedules to bring it in by secondary legislation, though that is by no means ideal. I appreciate, we don't live in an ideal world. So it's not at all to put the process on hold. It is to devote the time that we have available between now and its necessary introduction to getting it, and it would have to be gradually more and more correct and usable. That does not preclude at all putting through and getting through the fundamentals that can be got through at the earliest possible stage. It's a question of between doing it quick, doing it cheap, or doing it properly. Now, maybe you can only have 2 out of these 3, and I would rather have it done slowly and properly than quickly and ill done.
So I think that's where there's maybe a slight difference between accountants and lawyers, that, in my opinion, lawyers do prefer it to be done properly in the long term, whereas we have to do audits by 3 weeks after the year end and things like that. I just think that there is a balance to be struck in there, and I just wonder if the government hasn't got the balance right. Because, I mean, frankly, if all this Parliament had to do was look at this piece of tax legislation, yes, we could spend the next 3 years on it. But unfortunately, we've also got landfill tax to look at. We've got the Taxes Management Act. Yes, we'd have liked 10 years or 5 years or whatever it would have been. But is this a reasonable compromise? Is it, or, and I'm interested in the others as well, that we've taken some of the SDLT stuff, but that's just inevitable because of these timescales, and there's not a huge amount we can really do about that.
I think it is a compromise. I don't think that it is quite reasonable yet. The first detail, we have no detailed legislation in partnerships at all yet. Good example of one that what we're going to get is we don't know. We've got what we have got straight reproduced. We've got our first sight, which the Parliament has not yet, of the leases stuff yesterday, of legislation that on current timescales is supposed to be enacted by the end of June. Now, that is not a swift timescale in any sense, even to have time to give kind of detailed technical comment as opposed to the principles that are available to members of the Scottish Parliament, or indeed to be considered by people who are genuinely anxious to assist in it being got right. So, yes, I think it is a compromise, but I think that the compromise would be better met by recognising that bits require a good deal more work, accepting that and doing that work over the time that there is available. It doesn't need to hold up anything else, including setting up the practical systems that come into play in order that actually the first bit of LBTT actually gets collected on 1st April 2015. None of that needs to stop. Indeed, it needs to leap ahead.
Okay, I mean, can I ask, is that the opinion of the other witnesses, that we have not reached a proper compromise on this between timescales and getting it right?
I don't think that you can make that comment about the bill as a whole. I think in relation to partnerships, you mentioned the difference between lawyers and accountants. I think that the partnership SDLT rules are often perhaps not well known by accountants, but encountered by lawyers, and it really doesn't work very well in practice for everyday regular partnerships, and there's too much focus in it on potential tax avoidance and big partnerships and all the rest of it. It's far too complicated and it needs to be fixed. So I think in relation to partnerships, we do think it would be worth trying to do something with it, rather than leaving it as the drafting which is in the bill, which is a sort of cut and paste from SDLT. And as Stephen has pointed out, does need some fixes to stop some tax avoidance schemes being able to be sort of pushed through the cracks. So I think in relation to partnerships, it would be worth spending some time between now and 2015 to try and get a better partnership code. But in relation to in relation to the bill as a whole, I don't think that our view is that it's nowhere near ready. I think the particular issue of partnerships is the one.
And is it inevitable that with this partnership stuff we have to go through it kind of line by line and all the nitty gritty? It's not possible to kind of overarching more of a purpose clause or something that would sweep some of this together?
It might well be. I mean, I think Alan's sort of expression of it is probably very valid. It might well be, but it's not going to be possible to get. I wouldn't have thought it would be possible to get an amendment like that drafted up and tested by stage 3 of this bill. You know, I think that might be quite a big ask. But I just do not think we should go forward with the cut and paste that we have at the moment. I think that's not a good thing for the long term. Also, as you've mentioned, the Parliament has many other things to consider, and we do have experience from dealing with Westminster that whilst there may be a focus on the legislation when it's being brought in, it can be mighty difficult to get the Parliament to go back and look at it afterwards. So, you know,
that's very much been the case. I mean, I really want to move on to another subject, which, I mean, the net present value thing, you know, I think fills everyone with horror, this horrible calculation. And I mean, I quite like the idea of using actual rent, but I accept that things have moved on and that everybody's accepting that's not possible. I mean, can somebody explain, with the net present value, it talks about using the same discount rate as is used for SDLT. I don't know if any of you can explain why that is the case and why it's 3.5%.
Treasury set rate, I think, to do with the Treasury's Green Book, if I'm correct, thinking. So temporal discount rate, I think, was the description. It was set at 3.5% from the outset of when the changes to leases, which didn't happen immediately with SDLT, but came in something later, was set. As I understand it, there will be powers taken in the bill that Scottish ministers are looking to potentially change that as the tax is devolved. So at least there will be the flexibility, as I understand it, going forwards within the Scottish Parliament to make a change to that rate.
To my mind, the rate would, in some way, might be related to inflation or to interest rates, and to just choose a figure seems quite strange.
The figure was the UK government borrowing rate in 2003.
Yes.
If you remember 2003, that was before the credit crunch. And I think the expectation was that long-term interest rates were moving out. So the discount value would increase from 3.5 to whatever the higher rates would be if the long-term interest rates moved out. Then, of course, 2007 happened, 2008, and we now have a base rate of 0.5%. So it's been stuck at 3.5.
Yes.
It's not been amended. But that's where it came from. It was UK government borrowing rate in 2003.
So there is a risk, if that became very different, either there could be a gain or a loss to the public revenue because that figure is way out of line with property prices, inflation, everything.
It could do, but it's entirely within your control, what number you want. You could make it 0, in which case it would be actual rents.
Yes. Okay, that's fine just now, thanks.
Gavin? Thanks. Just, we've heard a lot about the partnership provisions, so I don't want to dwell on them for too long, but just in terms of your actual suggestion, you've used all sorts of adjectives and nouns to describe what you think of the provisions, but is your view that they should be deleted entirely from this bill and put into the tax management bill or another piece of primary legislation? Do you have a view on what actually practically should happen?
Yes, my view is that they should be deleted in their entirety from this bill, and it should be recognised that they will, however, be brought back as an amendment to what will then be the LBT Act before it comes into force. Whether that's by means of the Taxes Management Bill or by secondary legislation is beyond my parliamentary and constitutional competence to know which way to do it. But I know it could be done by either of those. I mean, that would be possible, I think, by either method.
Is that shared by the Law Society?
I am. I'm in the same Law Society committee, so with that hat on, I share that view. But Isabel is wearing that hat today.
I think it is our view that would be a better way to approach it.
It would also focus the mind. If there is legislation now there's a temptation to say we will muddle through with a version of that, perhaps as amended by some of the things that Stephen's suggesting when that comes forward. Whereas if there is a gap and there's a recognition that it has to be dealt with before 1st April 2015, well, it will have to be dealt with. And you've always got, I mean, worst case scenario, horror of horrors, you've got what's there to fall back on. You know, it can be said, right, we haven't managed to solve it. It's done for SDLT now by this. It was in our original LBT bill. We'll bring it back. A council of despair, but there it is.
Question to Isabel Dunverno. You were asked by the convener right at the start, how well have we done with this bill in terms of getting, I suppose, Scots law, Scots legal terms in it, and you gave the answer in relation to leases. You felt it was quite positive. You hadn't seen the actual amendment yet, but actually you felt in terms of dealing with Scots legal terms and making sure that we got rid of use of English-only legal terms, whether it's lessee or something else. Are there other parts of the bill where you think we still need to do some work in terms of making sure it is Scots law specific?
I think there are. I'm actually going to ask if it will be possible for Alan to answer this question, because he's been concentrating on that more than I have, if that's okay.
Yeah, it's slightly odd. Isabel, who is an accountant, is representing the Law Society today, and I am a lawyer representing ICAS. We're a very small but friendly pond. I've been looking at a lot of the terminology with contributions from Professor Kenneth Reid, who was heavily involved in the land law reforms in Scotland from the Scottish Law Commission, which led to the abolition of the feudal system. And I had an extremely useful meeting with him and some of the bill team, and there are some amendments that have come forward as a result of that. I suspect that there are more that need to come. Just it gives me a chance, an opportunity to mention some of the other things about really which Mr. Mason was asking about the balance. Your other subjects today include that balance. Trusts, which we've not mentioned at all, again is something that is there with a particularly egregious and purely English bit of law extracted from the SDLT legislation at the moment. I mean, which frankly I believe needs to be changed. I confess I've not seen whether the amendments are there to do that yet. And another example would be the subsale stuff. There we are, something that working on the detail needs to be done and come out. But I think that quite a lot of it has been accepted, although it was not in the original bill in terms of terminology, and it does need to now come forward in the form of amendments to bring it into play. I've mentioned lessee and tenant. That's just a terminology thing. There are ones that are slightly more than terminological that actually reflect practice. I've mentioned already the start date of a lease, the duration of a lease. That also needs to be looked at. But we are getting there, I think, would be fair to say, rather than be actually there at the moment.
Just mentioning the word trusts there just prompted me to ask something else. And the Scottish Government paper to us says the LBTT bill as introduced broadly replicates SDLT legislation governing trusts. Is that a missed opportunity in the same way that it is with partnerships, or is that less contentious and you're broadly happy with that approach, subject to seeing the amendments?
Subject to seeing the amendments, yes. I think it's possibly less of a problem. If one was looking at it again, it's actually the same sort of issue. It is selling the economic value of land, in this case through a trust rather than a partnership, that should be the principle that is being struck at. And that still needs to be looked at. The provision in the bill at the moment specifically refers to the trust law of England and Wales, and that's the bit that needs to be changed. And I'm not quite sure, I haven't seen the amendment in that yet to know how it has been. Stephen? Yeah,
I mean, I've spent a lot of time on the trust provisions, both independently and with the bill team. And in January, we went through one point which Mrs. Urquhart found the solution to, which is quite straightforward. But these provisions, the SDLT provisions, don't work in Scotland now, and all you've done is copied them. They don't address Scots law at all, and that's a very glaring example of how they need to be made to work with Scots law. The other point I would make is a point I made in para 8 of our paper on submitted to this hearing, and that there's a lot of places in the bill where you cross-refer to UK statutes. And we would much prefer you to copy out what the UK statute now says. Not only would it make the bill easier to read, but it would mean that if the UK government amends that provision, you still have what you wanted, rather than LBTT plus bits that have been tweaked by the UK government without your consent, power or control.
Would entirely endorse that, actually. A few occasions where that occurs, notably in relation to Corporation Tax Acts and, Companies Act as well, which would be very useful. And I don't think it is harder. It may use more bits of paper, actually, just to extract it from the version that you want now and copy it out.
Coming to Stephen Copeland's paper on a separate issue, you talk in your paper about exchanges, and you raise a particular concern around local authority regeneration where landowners transfer to a central entity. Can you just expand on that particular bit of your paper?
Yes, certainly. I mean, the starting point in SDLT was that if you exchanged land for any other kind of property other than cash, then the SDLT was payable on the market value of that property. Now, practitioners quickly realised that the market value does not include VAT, and SDLT normally is payable on the price plus VAT. So HMRC thought they were losing out, and eventually amended the exchange provisions in a way which they believed meant they could collect the VAT and also counter avoidance. The amendments and the SDLT law as it currently stands are utterly incomprehensible. I don't know anybody who understands them. But the revenue policy starts off from the proposition that they want 4% SDLT on the market value of the land plus VAT. Now, that's fine if you have somebody swapping an office block for a shopping centre. That's all fine. However, what you do see is quite often you have a rundown area of a community, a town centre, a high street, an industrial complex that's completely redundant. And what will happen is that the local authority will start a planning consultation and say, look, we want to regenerate this area. Now, what they could do is try and do it on their own with some commercial partners and use the compulsory purchase provisions to compulsorily acquire the whole lot. And there is a relief both in stamp duty, land tax and in the LBTT bill if they do use the CPO process and say, we're taking it and then we're going to give it out later. And there would be no tax on the acquisitions because they're under a CPO. However, CPOs take a very long time. They're adversarial in nature because you're not, people aren't agreeing to give you their land, you're taking it from them. People can judicially review them and the process can go on for years whilst this area of land is just lying redundant and not generating any value to anybody. So in practice, the CPO route is rarely used. In practice, what local authorities will do is try and work with the landowners, with developers, to regenerate that area. Now that area will have a piece of land and people will own different bits. And those bits are shaped for whatever it's been used for in the past. But if you're completely going to change the use, you're going to want different bits in different shapes. So the mechanism usually is, let's all put it together into some development vehicle. We all jointly develop it, and at the end of it, we give interests out. Now, that process of you give me land or we give somebody land and somebody else gives you something back. They are all exchanges within the terms of both the SDLT legislation and the LBTT legislation. And I don't have a problem with that. The problem is in the application of those provisions. And we're in the bizarre position now of having to write letters to HMRC arguing that the value of what we're doing is nothing, even though we all know it's worth many millions of pounds, because otherwise you end up with 4% tax on the putting everything together in one pot, so you can knock it all down, build what you want, and then 4% tax on the way out. Now that's 8% tax leakage on what is basically a public-private regeneration project. It's regenerating an industrial area, it's regenerating a town centre. And at a time when both public finances and private ones to some extent are limited, that never seems to make sense. It doesn't accord to UK government policy. So on the exchanges provisions, whether you do it by, if you like, extending the CPO relief to quasi-CPOs, if I can call them that, or some other mechanism, you need to be aware that the way that the provisions are drafted and applied in the UK at the moment create this problem. And I would urge you not to repeat that problem, because you end up in the unsatisfactory position of arguing that the values are minimal to avoid the tax, a tax which, by the way, HMRC don't want to collect because nobody thinks this is a sensible way of taxing anybody, and try and find another solution, whether it is by amending the exchange provisions, which is the root cause of the problem, or to deal with this particular scenario, extending kind of the CPO reliefs to situations where a local authority could have CPO'd, but in fact is doing it by agreement rather than by a CPO, which in fact has a precedent in the capital gains tax legislation for rollover relief, where the threat of CPO is sufficient.
Have you had the opportunity to raise that issue with the Bill team or the Scottish Government so prior to now?
Yes.
Yeah, okay.
Yes, I have. And I met with them when I came up for the Chartered Institute of Taxation's Joint President's Luncheon at the Signet Library in March, 15th of March, I think it was.
Okay. Lastly then, just on subsale relief, you put forward the view, as of others, that it would be a mistake to lose it entirely. You suggested you can only use subsale relief or another relief. You can't use both. Others have suggested that you would have to formally apply for subsale relief as opposed to simply deciding that you're going to do it. Is there anything else you want to put forward about subsale relief in order to try and persuade the government to change their view, or have you had subsequent discussions since stage one that makes you think the government there might be some kind of compromise?
No, I haven't had a subsequent discussion. The only thing I would say is, yes, the subsale relief should be claimed, but the claim is not that formal. I mean, certainly the way reliefs are claimed in SDLT is you tick a box or put a number in, and that's the full extent of the formality. And it's then policed either through the inquiry mechanism or more often than not by the tax inspector dealing for the purchaser on all the other taxes, corporation tax, what have you, comparing what's happened in stamp duty land tax with what they've got before them with the accounts and the tax computations. And that's a point that I allude to in paragraph 7, is that you do need to have that relationship with the HMRC, who are going to be looking at those, to sort of police LBTT for you. So yes, certainly subsale relief should be something that's claimed, positively ticked a box so it can flag up, thereby giving the tax authority in Scotland, Revenue Scotland, the opportunity to see, somebody's claimed subsale relief, and then to double cross-check, see if anything else has happened on another return on the same property on the same day. So that gives you a mechanism for policing it if you've got the flags on the return that has happened.
Could I just add a point on subsale relief? I'm not convinced that just making sure that you could only claim subsale relief or another relief would actually counter all of the schemes that are going about and which have been offered to clients of ours by other advisors in the last couple of months, and therefore I'm not quite so sanguine that would be an answer to the problems of avoidance that have relied on subsale relief. And so that's why the Law Society has suggested that the way forward would be for a targeted relief in relation to forward funding, for example, and perhaps that kind of relief could be subject to a more formal clearance approach, so that it wasn't just a question of ticking the box or putting the claim code in or whatever it is, but it was more of a formal thing with the tax authority, so that they could look at the paperwork and satisfy themselves. Obviously there is a balance to be struck there between the costs of having to do that and, you know, the aim of trying to avoid trying to stop tax avoidance schemes from being implemented. But I think we just had a concern that some of the schemes would make your hair stand on end, and we really don't want to have those in Scotland.
Very much. Jean?
Kind of supplementary to that. I mean, is that then what's been proposed? You would accept with exceptions, if you know what I mean.
Well, I think what's
so
being
there's a default position.
What's currently in the bill is no sub-sale relief at all. I think
We haven't seen any proposals yet.
no. Well,
For what is to come,
I think
if anything.
yeah.
My understanding is that it, you know, not to have it, that not to
Yeah.
have sub-sale relief. But is there, really what I'm asking in relation to Gavin's question is that if we maintain that, with the exception of this discussion in advance, is there so few occasions where you might get it might be considered that would be an exception, rather than leaving it open to the kind of abuse that I understand has happened through stamp duty land tax?
I think we felt that having targeted reliefs would be a better way forward. So we focused on the forward funding transactions that I think the committee has heard evidence about, and the possibility of having a targeted relief for that. And perhaps in order to police it more closely, to have an advanced clearance system. But I don't think that we've been urging the government to bring in sub-sale relief across the board.
I think as well, if it's combined with, you're asking if there was to be no targeted relief or nothing along the lines that Mr. Colclough was suggesting, then would its complete absence be better than what we have now? I think that possibly yes, as long as, and this has been raised before, the question of what I describe as nomineeship is dealt with properly, which is simply title, the actual legal title to the property being taken in another name from the person with whom the original contract was made, without, again, any economic movement involved in that subsequent, which might be seen as a subsale in some sense, but in fact is just taking title in another name. If I contract to buy something and instead I wish in fact it to be held by a company that I own 100%, and therefore I provide to buy it in the name of myself or my nominee, then I should be able to have my company take title to that under that original contract. And it's not absolutely crystal clear. I've been told that that is permitted under the current bill, and that would not involve, as it were, a subsale that would be in a second chargeable event. Then, if that is the case, then what we have now is possibly better than what we have under SDLT.
Can we just add in, there's been a lot of discussions, and the principal concern that we've had from an industry point of view is the financing possibilities that could be lost if we just have sub-sale relief go away and there is then no targeted relief. So we'd agree that some form of targeted relief to support financing is very important right now. It's an alternative mechanism that's necessary because, quite simply, there is not debt finance available, particularly in the commercial property world, to the extent that is really needed. And therefore we see it as essential that there is some form of relief that will cover what was previously achieved via sub-sale relief. However, I have to say there's a slight disagreement with what Alan's just come forward, because from talking to our members within the development and institutional world, they're not agreed that the nominee route would be a means to meet the problem. And the problem being, we understand the Cabinet Secretary doesn't want to replicate subsale relief for the reasons of tax avoidance that have been made plain at stage one and which have been implied too. But there is this concern about the unintended consequences of that for finance and funding of development going forward. And so we would certainly urge the committee to push for a targeted relief.
Yeah. Just to be clear, I don't think that nomineeship does solve the kind of situation that David has referred to, and I agree that a targeted relief would be much better for that. It's a different and real problem, and the difference of the problem is that there are financial consequences of forward funding, which there are not in pure nomination.
The nominee clauses are terribly common. It's just saying, in exchange for the price, the seller will convey the property to the purchaser or the purchaser's nominee, and that happens in commercial contracts all the time. So for SDLT, we're actually relying on subsale relief to not have two SDLT charges there, whereas obviously we don't have LBTT subsale relief. We need something that fixes that. But I think the bill team have said it will be fixed, although quite how we haven't yet seen. It may be by guidance or published statements or whatever.
Okay. That seems to have concluded questions from the committee. I'm just wondering if you've got any further points you may wish to raise. We've touched on leases, partnerships, exchanges, subsale and unit trusts. Just wondering if there's any additional points each of you would like to make.
On the
David.
Points and the reason why it very quickly boiled down to a choice, to be honest, between what we've got and the proposal to do a sort of annual retrospective charge. I think the important thing to stress in that it's not just about, I suppose, the mechanics of how the tax is paid and the technicalities. There was also a concern about what might happen to the number of taxpayers who might be called if we had an annual charge. You could have seen the threshold for which you pay it actually reduce considerably, which would have had a much wider net of taxpayers. Implications, obviously, for administration compliance would go with that. But more importantly, I think it's the perception of the businesses and taxpayers themselves facing a charge which, under the current system, they probably wouldn't have had to pay. The only other stress from that, I mentioned competitiveness right at the beginning. Obviously, let's not forget there is, for those who do pay the tax at the moment, there's just a single 1% rate on the leases side of things. Purchases is different. And bearing in mind that many of the actual taxpayers of SDLT on leases are probably quite large, and very often businesses that are multi-letted across the country, there is always going to be some form of competitive comparison that I think we must bear in mind going forward in the way we structure this charge.
Anyone else, any final comments on any aspects?
I think to reiterate some earlier points that have been made, we do have a tight time scale, but as has been mentioned, there's nothing that really can be done about that because the start date's 2015, and to some extent the date of enactment of the Scotland Bill was what has eaten up some of the timetable. However, I think we mustn't lose the opportunity of trying to make this first Scottish tax just as good as it can be, and we really don't want to have sections of it that are entirely incomprehensible.
No further comments. Okay, well, thank you very much. Your evidence is, as always, very much appreciated, and some of the points that you've raised just now are certainly will be taking up directly with the Cabinet Secretary in a few minutes. So thank you very much. I'm now going to call a 5-minute recess so we can change witnesses and to give members a natural break. The committee will now continue its oral evidence session on the bill. Can I therefore welcome to the meeting the Cabinet Secretary for Finance, Employment and Sustainable Growth, John Swinney, who is accompanied by Neil Ferguson and John St Clair from the Scottish Government Bill team. I'd like to invite the Cabinet Secretary to make a short introductory statement.
Thank you, Convener, and I welcome the steps that are now been taken to proceed with stage 2 of this bill, bearing in mind we've made some substantial progress in the consideration of the issues associated with the bill and the stage 1 process and the debate which took place on the 25th of April. A number of issues emerged from stage 1 that the committee will be considering as we proceed through stage 2, and I'd like to address some of those at this stage. First of all, in relation to non-residential leases, I'd like to pay tribute to the work of the Non-Residential Leases Working Group, which has been meeting in parallel with stage 1 consideration of the bill. As the committee is aware, the group examined a range of options for the taxation of non-residential leases against a number of criteria. After considering the evidence provided by the group on each of the options, I met with the group to discuss and to identify the best way forward. Since then, the working group has identified invaluable assistance to officials in preparing provisions on the taxation of non-residential leases that will better align LBTT with Scots property law and practice. The group has considered and agreed a comprehensive approach covering a whole range of issues affecting taxation of leases, an approach that will be reflected in the amendments I propose to bring forward for stage 2 of the bill. I was delighted to note that the Law Society, in its formal stage 2 evidence to the committee, supports the chosen approach on the grounds that, and I quote, should remove the many complexities which bedevil the SDLT lease code, close quotes. The second issue is in relation to partnerships and trusts. The provisions in the bill covering the taxation of transactions involving partnerships broadly mirror those for stamp duty land tax. The provisions are complex, but they have been working in practice for some years now. We had hoped to undertake a thorough review of these provisions with a view to simplifying the LBTT bill. Having examined the issues carefully, it has become apparent that even minor changes could give rise to a significant risk of unintended consequences and unpredicted outcomes, which would not be in the best interest of either the taxpayer or the tax authority. It has not proved possible to review the partnership provisions and discuss detailed proposals with stakeholders prior to stage 2. While we will propose minor amendments to these provisions, any major review will have to wait until later. I note the issues that are raised around these points by the Law Society, particularly the proposal to establish a working group to consider taxation of partnerships, and I will look carefully at that proposal. The third issue relates to energy efficiency proposals, and during the stage 1 debate a number of members noted the proposal from the Existing Homes Alliance to link the amount of LBTT paid in residential transactions to the average energy efficiency rating for housing in Scotland. Given the importance of the issue and our strong support for improving energy efficiency, I have given very careful consideration to the proposals discussed. In doing so, I sought to balance the need for a simple, certain and efficient tax system with the likely improvements to energy efficiency that would flow from the change proposed to calculating the tax liability on the sale of residential property. I believe that the proposal would add considerably to the complexity of the tax, since additional information would be required in order to calculate the liability. This information may change over time, and for every house sale transaction would have to be checked carefully for reliability and accuracy. In addition, while I support the objectives of the proposal, I could not see that it would have a direct positive impact on the energy efficiency of Scotland's housing stock. Against that background, I welcome the interest and the enthusiasm that surrounded the introduction of this proposal, but I would confirm to the committee that I do not intend to take this forward during the bill process. With regard, fourthly, to the setting of tax rates and bans for residential transactions, I clearly understand the views expressed by the Edinburgh Solicitors Property Centre that the time between tax rates and bans being announced and the introduction of the tax should be short to avoid freezing the market. There are other factors to be considered also, including arrangements for introducing the new tax testing systems and communicating with taxpayers and their agents. I've also carefully considered the views of witnesses who were looking for earlier certainty on tax rates and bans for non-residential property transactions. The property development industry is key to Scotland's continued economic prosperity, and I'm keen to do what I can to support the issues that they have raised. My discussions are ongoing with stakeholders on the optimum time for setting out the tax rates and tax bans, and I will further clarify my thinking to the committee as the bill progresses. The final issue, Convener, is the issue of subsale relief. In my closing remarks in the Stage 1 debate, I committed to further exploring options to ensure that the property development industry in Scotland was treated fairly following my decision not to replicate the stamp duty land tax subsale rules, which the committee supported, which have been the subject of aggressive avoidance activity. Since then, I have met with representatives from the industry who have provided a range of suggestions as to how we might proceed. Discussions on this question are continuing, and I will keep the committee updated on these questions. I'm trying to balance, essentially, the consideration of providing an opportunity for the development industry to be able to structure transactions in a fashion that meet their requirements, whilst on the other hand, avoiding the creation of any opportunities for tax avoidance, which has been one of the clear hallmarks of this bill, and I don't at this stage wish to undermine the strength and reputation of the bill in that respect. So my consideration is essentially weighing up the balance between those two considerations at this stage. Convener, in conclusion, can I commend and express my thanks to a wide range of stakeholders who have assisted the government significantly in dealing with what is a very complex area of policy, and I look forward to that consultation and dialogue continuing, and for that dialogue to continue with the committee into the bargain.
Thank you very much, Cabinet Secretary, for that comprehensive opening statement. I will, of course, ask a number of initial questions and open the session out to colleagues around the table. And Jean has already put a bid in before I've even asked the first question. So, some of the points I'm going to be raising with you are not so much with regard to the recommendations made by the committee, because in actual fact, in your opening statement, you've actually answered many of the points which I had highlighted to subsequently ask you. But what are some of the questions I will be raising with you, and indeed I believe colleagues around the table probably will be based on some of the kind of evidence that we received in the preceding session to this earlier this morning. And the first one's a fairly straightforward question, actually, which is about leases. And it was raised by Alan Barr of ICAS, who basically asked if there's going to be clarification as to when a lease would begin for LBTT purposes. For example, would LBTT be, would it be considered from when a lease is actually signed, or when someone accesses a property? Is there an amendment? We received a battery of amendments just this morning, but obviously members of the committee have not had time to actually look at each and every one of those in relation to the committee. So I'm just wondering if we can get clarification get provided on that issue.
The question of when a lease will commence will be consistent with the rules associated with SDLT. There'll be an amendment to section 30 of the bill to provide for that, and I'll just ask my officials to clarify at what moment they will be applied.
Yeah, the amendments for leases will be lodged in good time for the second day of the committee's consideration on leases. On amendments rather, and sorry, actually this particular issue is dealt with in the amendments for section 30, which were lodged on Monday. So the notification section 30 deals with that. The substantive schedule on leases would be part of the considerations for the second day of stage 2. So the committee already has that amendment in the form of section 30 amendments, which were lodged on Monday.
Yes. Now, moving on to an issue which was discussed at great length this morning, which was the issue of partnerships. And again, most of the comments are from Alan Barr, but other representatives around the table from Law Society, Scottish Property Federation, and see it all said much the same, not quite perhaps as assertively as Mr Barr, but what he said was that there's no detailed legislation on partnerships. The legislation as currently stands is, and I quote, a disgrace. It is completely lacking in comprehension. Other witnesses this morning agreed with that, and does not work. And that we should start again from first principles. What we have is a broken toy, and all that appears to be happening in terms of LBTT is a cut and paste job. Witnesses commented on the missed opportunity, and this is of the greatest significance. What they suggested was that at this stage partnership should actually be taken out of the bill, because there's not enough time to discuss it. Now, Isabel Dinverno in her submission in paragraph 26, the very last paragraph in her submission, said that a working party should be established to consider LBTT and partnerships in more detail over the coming months, and colleagues around the table suggested that there should perhaps be an amendment to the bill later on, secondary legislation, whatever, to discuss this matter. So I personally was taken aback by the kind of vehemence of the kind of evidence in terms of this particular issue, which of course is not something we've really dealt with prior to now. And I'm just wondering what your view would be in terms of those comments.
Well, certainly the committee sounds as if it's had a very fruity morning with some of the language that's been used. First point I want to make, Convener, is I'm not sure in your summary of the remarks there that you said that the provisions on the LBTT had been described as a cut and paste job. I would want to reject that comment very clearly to the committee this morning.
Talking about in terms of partnerships
Well, that's slightly different, convener. So that's helpful. That's been clarified, because that certainly I can assure the committee that I don't view the LBT legislation as a cut and paste job. On partnerships, what we have decided to do is to replicate the provisions on SDLT with, and there will be minor amendments that come forward at stage 2. And there's a very good reason why we've done that. We commissioned external advice to assist us in the effort to try to simplify the provisions of the legislation in relation to partnership rules. I would accept that these are complex pieces of legislation. I wouldn't deny that. But we engaged external advisors to provide us with assistance on how we might simplify those rules. The work that was generated by that external commission demonstrated the complexity that I've highlighted in the legislation, which itself is a product of the commercial complexities in partnership and trust arrangements. So the choice that I think we were faced with was entering into a debate at this particular stage in the legislative process, which would see us doing one of two things. One would be to try to amend existing provisions to make them less complicated, more simple. And I could not be confident that as we go into such a complex area of territory in the legislative opportunity that we now have, that we would not create unintended consequences in the process of doing so. And I think that would be a dangerous step for Parliament to take. The alternative is to remove the provisions altogether and leave a vacuum. And I have no intention of leaving a vacuum. So the rules are there. They are currently operational. What I am certainly prepared to do is give consideration to the issues raised by the Law Society as part of the suggestions that they have put in place, and to consider how best we might proceed on any further review of this question.
Yes, indeed. Just to follow up on that, yes, the issues that were of concern with partnerships, I think that the witnesses were broadly supportive of the Scottish Government's work in terms of LBTT to date, but it's this particular issue. And I think that the issue of the witnesses said that they understand that you will be going forward with much of what is in the SDLT at the moment, but the problem, of course, is that they're saying is that this simply doesn't actually work as it stands in SDLT, and it's a missed opportunity in terms of transferring that onto our own bill, even if, and therefore that's why they've suggested it would be better to work again from first principles, which was another point raised this morning in terms of this specific partnership issue, so that it could be added to LBTT later on, rather than having it included at this stage.
But the Government is advancing an amendment at stage 2 to the bill, which will provide us with the power to amend this area of the bill by secondary legislation. Obviously that will be subject to scrutiny and consideration by Parliament in the usual fashion. So the opportunity for us to, for example, enact alternative provisions that may arise out of some of the consultation and dialogue that we take forward with stakeholders would enable us to do that. And as I said already, I'm very keen to explore the suggestions that are made by the Law Society. I think the idea that the provisions, the provisions are currently part of the SDLT legislation. They are operational. They may be complex. I could see that. I accept they're complex, but they are part of existing provision and they are workable. But we do have, or we will seek from Parliament through the legislative process, the power to amend these provisions by secondary legislation, and that provides, I hope that provides the committee with the reassurance that there is an opportunity for us to explore these questions further.
Okay, thank you, Cabinet Secretary. You mentioned in some detail the issue of reliefs in your opening statement. In terms of your response to committee, you said that you want to ensure that forward funding arrangements are not subject to double taxation under LBTT and will work with key stakeholders to achieve this objective, and you talked about progress being ongoing. I'm just wondering in terms of whether targeted relief will be considered specifically given the lack of debt financing, because that's one of the issues that was raised again this morning.
Well, that's essentially a material part of the consideration that I'm undertaking, Convener, because I think it's that is one of the factors that is a genuine issue within the marketplace from the evidence that I've been able to discern. So therefore, ensuring that the financial instruments, the opportunities to attract finance are in place to enable us to take forward, developers to take forward transactions of this character. It is important that that is reflected in the way in which we structure any provisions within the bill. Now, as I said in my opening remarks, I am essentially trying to take forward measures that will be of assistance to the development industry, recognising the contribution they make to the Scottish economy. But I don't want to do that in a fashion that opens up the opportunity for avoidance, because we've taken a very clear line on that point, and I don't want to dissipate that particular line. I think it will be... I don't think we could do proper justice to any alternative provisions within the legislative process that we have in front of us, so I do not foresee bringing to the committee or to Parliament stage 2 or stage 3 amendments on this provision, but I am exploring what opportunities there are for us to design mechanisms that would enable us to take forward an approach of this type, and that of course would be provided for through the order-making powers of the bill, and would be subject to consideration by Parliament through the affirmative procedure of consideration of that order.
Thank you. Just one final question before I open the session out to colleagues, which was one that came from the Law Society this morning, which is just where are we in terms of computer technology and the systems in terms of the deliverability of LBTT?
The progress on the development of the necessary operational procedures are assessed on a regular basis to determine whether or not the plans are on target. The last report that I have seen indicates that the work programme is being maintained and sustained, so I'm confident that the preparations that are being undertaken at the present moment are in order in terms of ensuring we have the necessary operational arrangements in place to support the introduction of LBTT in April 2015.
Okay, thank you for that. And opening up the session, the first person to ask questions will be Jean, to be followed by Gavin.
Thank you, Convener, and good morning, Cabinet Secretary. I've never been the second person to ask a question, so that's why it's so extraordinary that I had to put my bid in early. Can I ask, I mean, in an ideal world, would you have liked more time to address to this bill, or are you confident that the issues that need to be addressed are going to be addressed in reasonable order, accepting that you've said that you're making allowances in the bill for change to be made later on?
Yes, I'm happy with the time that we've had available. We've undertaken extensive consultation on the formulation of the bill. Some of that throws up issues of genuine disagreement. So on the question of subsale relief, I have taken a particular policy position. I didn't need any more time to come to that policy position. I had all the time in the world to come to that position. I think there are arguments being marshalled now, which were marshalled during the consideration of the bill about particular issues in relation to the development industry, which I considered at the time and was not persuaded by, neither were the committee persuaded by. in light of further representations, I'm considering that again, and I will come to a conclusion as to whether or not I think there is a satisfactory balance between providing for these issues without jeopardising our position on tax avoidance. So I'm entirely satisfied with the time we've had at our disposal to consider these issues. We've also been able to undertake, for example, quite extensive consultation with stakeholders on issues around leases, which were not concluded by the end of stage 2, which, as I understand it from the panel that you've heard this morning, there is general agreement that that work has been well undertaken and well consulted. There are further issues about partnerships that have been raised this morning, which, well, I think they would need. They're a very specific and narrow set of provisions, and I think certainly I'm very happy to give consideration to what other measures can be taken in that respect. But there are provisions in the bill that, to my view, satisfactorily deal with the provisions around partnerships.
Thank you. Mr. Stephen Colclough, going back to the kind of cut and paste suggestion, he raised the issue that the new bill still cross-references to the UK bill, and that leaves, I think he was suggesting that we were vulnerable if the UK changes its bill in sections that we are cross-referencing to, then that means that we wouldn't have any control. In fact, if our bill is referencing a bill that we don't control, and suggesting, I think, that it should be written in full. I mean, I just wonder how you feel about that.
There are only one or two cases in the Act where there are references to UK bills, and these are ones which are very firmly rooted in company law, and there didn't seem any reason for writing out at great length the provisions in the Companies Act. They're very unlikely to change, but if we have time later on and there was a change, we would certainly introduce our own. It also gives users of the legislation some link to the old legislation, so it's easier for them to know where that particular provision came from.
I mean, could you give a for example? Just
the definition of connected persons in 1022 of the Companies Act is a very long provision, and we just reference it in our bill rather than replicating the language of it. I think that's the main one that he's talking about. It would have added quite considerably to the length of the bill if every time we had to reference that, we had to write it out in full. And it's very unlikely that that definition will change in the near future, so there isn't an immediate risk here. But it does give users a link to the old legislation, and we think that's user-friendly. It's not an area that one is particularly, there's a particular Scottish thing about connected persons either.
Thank you.
Okay, Gavin, to be followed by Joan.
Thanks. Just on that last point, then, if there aren't many provisions like that, would it not just be easier to literally cut and paste those provisions, and would it not be user-friendlier to have the entire text contained within one act instead of having to then go and look at one or two other UK statutes?
Apart from those one or two cases, we have taken your approach in other areas of the bill and written out at length in our own language other references, much more obscure ones. So we called the balance here. I mean, it was not thought a big issue, but we would certainly reflect on it in the future, whether there should be a blanket policy of never making references to other UK statutes. But this hasn't been the policy in relation to the drafting of this bill.
The first question the convener asked was about the definition of when a lease commences. This is something that was raised in evidence earlier. Now, you said there's an amendment lodged to that effect under section 30, so I've just looked at those amendments, which, if I've got it right, are between amendments 19 to 23. Can you just show me there, where is it defined? Because
have to...
Well, it will be...
sorry, I was going to...
introduced, the amendments for the second day will introduce the leases schedule, and that details in fine detail the stage when a lease becomes an effective land transaction for the purpose of the taxing statute. You probably know that the lease paperwork is not simple. You can have missives for let, which can be a lease. You can have missives which are acted on, substantially performed, and then that becomes the date of the effective transaction. All these scenarios are spelt out in the leases schedule when it will be introduced.
I'm grateful to Mr Brown for asking the question, actually, because the information I gave at the outset wasn't quite right. What I was referring to in section 30 was when a lease becomes notifiable. In other words, when a tax return is then due. In terms of the beginning of the lease, that would be in the schedule that would be considered at the second day. So I'm grateful to have the opportunity to clarify that.
Thank you. Can I go back then, Cabinet Secretary, to the partnership issue, which again the conveners raised and was raised fairly heavily in our first evidence session. I mean, the contention of the witnesses today was that actually the current provisions aren't workable. I mean, you said they're existing, and I think you used the word workable. Their contention was that it was they used the term broken toy, they used the term dog disgrace, among others. I mean, their central contention was that the current ones aren't workable. Would it not be possible then just simply to delete them, but to have a public position that you're not leaving a vacuum, you are going to deal with this in the fullness of time, but by doing so, that means there's no way we can actually revert back to them. My slight concern of having a clause in there which says we can look at this by our order-making power, that retains the option of keeping these provisions, which the evidence, at least today, and I appreciate that was 4 people only, the evidence today was that they're not workable. Could it not be done that you simply delete them? That then forces you, as a government, to replace them with something that is deemed to be workable.
I think the question here, Convener, comes down to whether I think some of the terminology that's been used is well, people use their own terminology. It's up to them what words they use. I don't find these terms particularly insightful. Things might be complex, they might be complicated, they might be tiresome, they might be exhausting, but they're still workable. And that would be my contention, that these provisions are not easy, they're not simple, they're not straightforward, they're not particularly user-friendly, but neither are partnerships, neither are trusts particularly user-friendly, convenient, simple. All of this area is very complex. So I think it's better to be considerate in how we approach these questions and actually reflect the fact that there are complexities, there are challenges, there are difficulties in this area, but it's of the essence of the nature of the activity that's involved. So my view is that the provisions are workable, but they could do with being simplified. That's why I commissioned external advisors to provide me with a route through that, and that wasn't able to provide me with a route which I could conclude during this legislative process. What the government has aimed to do throughout this legislation is to act in good faith in all the approaches that were taken forward. So if we take the leases question, I gave the committee an assurance that I was going to look in detail at the leases question and get to a point where we had a satisfactory outcome. And we set up the non-residential leases working group. That's been a very participative process. I've met with the group. From what I can see, the group has had a pretty good experience of resolving these questions, and the government will make the necessary amendments to the bill to enact the conclusions that we have reached. And that's exactly the same approach I intend to take on partnerships. But what I don't think anybody would think was particularly appropriate was for me to leave a vacuum. I don't think that would be a responsible thing to do. But I do give the committee the commitment that we will look very actively at all of these areas. We'll do it with stakeholders, as we've done on every other provision of the bill, and recognise that where there are solutions that we can take forward, we'll bring them forward through the amendments that we will advance to the committee for to enable amendments to be made in this fashion.
So if I heard that right, then your intention then is to set up a working group along the lines of what you did with non-residential leases, or am I putting words?
I think that's that's an option that I'm considering. I said earlier on that I was considering what the Law Society had suggested in their own submission to the Finance Committee today, and I will do that. And we have the order-making powers to enable us to. Well, we will seek the order-making powers to enact any changes that are required. So I think that. I'm very happy to give the committee the assurance that in the spirit of how we've taken forward the approach on non-residential leases, we will apply the same spirit and ethos to how we take forward these questions.
I suppose ultimately then you take at this stage anyway, you take a different view from the witnesses earlier. You feel the partnership provisions are workable.
I do think the partnership provisions are workable because they're currently working. Now, but that's my point, convener. I'm not being facetious. They're working, so they must be workable. It doesn't mean to say they're not complicated, they're not difficult, they're not onerous. I'm not in any way suggesting that what the witnesses have suggested in that respect is not the case. But the arrangements are currently workable, and I think we should keep them in place and consider the issues that have been raised about them and have the necessary instruments in place through the amendments the government will seek parliamentary consent for to take forward any alternative provisions.
Okay, I'll leave it there. Suffice to say that there's clear debate there. I mean, the view was they are not working / workable was the view of those earlier. But
I've said that they're working, so I consider them to be workable.
I'll leave it there.
Deputy Convener.
Thanks, Convener. We've just been talking about the non-residential leases, and as I understand it, there was 5 options that yourself and the working group considered. I must say, on first reading them, the idea of basing the tax on rent that was actually paid quite appealed to me, because then it would be a real number rather than a complicated formula. I mean, could you just explain to us why that's not been the option that's been chosen and we're going down the net present value route?
Essentially, the rent actually paid will be a material consideration that underpins the net present value consideration that is undertaken. So I think that's an important element in strengthening the approach that's been taken. I think the issues of administrative complexity all begin to have a bearing on some of these judgments about making the calculations based on actual rentals paid. It increases the amount of bureaucracy that all parties have to become involved in terms of registering information and supplying information. So the type of approach that we have that we've agreed upon is designed to minimise that administrative complexity, but to strengthen the relevance and the reality of the substance of the judgments that are being arrived at around the net present value.
And did I get the impression that also the delay in the tax coming in would be a reason for not accepting that option, because it would only come in after the end of the year rather than ahead?
Well, there's a likelihood that we would, as well as administrative complexity, there's a likelihood that there would be delays in tax payments, some of which it might be difficult for us to overcome in terms of our commitment to revenue neutrality emerging out of this particular bill. So I think that would be a genuine risk.
So even if it was revenue neutral over, say, 5 or 10 years, would I be right in saying you don't have the flexibility to cover that with your borrowing powers?
Well, I would prefer not to. I'd prefer not to exhaust that as part of the process. I think there is an approach that can be taken which is the approach that we've agreed upon, which I think minimises the administrative bureaucracy, but it also reduces the degree to which we might have to seek to utilise the mechanisms to balance out tax revenues.
Thanks. I mean, in the net present value calculation, there's the question of the discount rate, and I did ask about that earlier to the previous witnesses. From what I understand, the 3.5% discount rate is based on UK Treasury borrowing levels some years ago, and I think I'm right in saying that you will have the power to vary that 3.5%. Yes, I mean, is that something you would be looking at? Because I would have thought that with inflation and interest rates over the long term, they're likely to vary, and that could seriously affect the tax that we actually get in.
Well, that's where, in a sense, we get into the nub of the calculations that will have to be made around the calculation of rates and the variety of other financing factors that we have to take into account in that process. So yes, it's a material consideration that we will have to undertake, and it will be part of the financial modelling that, of course, I will take forward. Because once the block grant adjustment is made, then we have to be giving active consideration to what revenue will be raised as a consequence of the type of measures that we put in place, bearing in mind the fact that this will have an effect on the overall resources that are available to the Scottish Government to support our priorities.
I mean that's reassuring. I just found it I was a bit uneasy at this 3.5 just appearing almost out of nowhere, but it could obviously vary over time. And I think the final area I wanted to touch on was just the area of charities, which we had spent previously quite a lot of time on, and we now have an amendment, I think it's number 13, which talks about the body is registered in a register corresponding to the Scottish Charity Register, and then it goes on to details. There's alternatives about if they're approved in England and Wales or other European Union countries, etc. I mean, I just wonder if you could expand on that a little bit, and especially the words corresponding to seemed a little bit vague to me, and I just wondered if we were happy with that wording, that we really will be getting charities that do fit in with what we mean as charities.
What we've endeavoured to do here, Convener, is to recognise the issues that have been raised as part of the Stage 1 process around charities relief, and not to create a requirement for charities that are well, not registered with Oscar, but not habitually operating within Scotland, that to essentially recognise the status that they will have as being a registered charity in another jurisdiction. I think the wording that we have put in place is satisfactory in that respect. I think it gives a clarity about what our intention is, and it means that a body would be able to operate in Scotland in the fashion envisaged without there being the need for separate registration. So I think we're, I'm certainly confident in the wording that's been put together to enable that to happen.
There'd been a question before, if we were too rigid, that would be open to challenge from within the European Union, that we were excluding European charities perhaps. So is the feeling that this will now stand up to the...
It's essentially designed, these are the considerations we've essentially been trying to overcome by the nature of the wording that we've put in place. And I think the terms of the amendment, I think, give us sufficient clarity about that point.
Thanks so much.
Okay, thank you. No further questions from the committee, but I just want to touch on a couple of points. One of them is something which Neil actually explained in a private briefing prior to the first session this morning, but for the public record I just want to ask about it. In any case, which is about bringing the legislation to line with Scots law and practices. And in the Scottish Government submission it says here that Scots property law is different to English property law, and the LBTT non-residential lease provisions have been designed as far as practical to reflect Scots law and practices. So I just wonder if you can tell us a wee bit more about that in terms of this piece of legislation.
Well, essentially what we have tried to do is to look at the formulate the legislation in a fashion that is reflective of the character and the terminology of Scots law. That is essentially, I think, been one of the weaknesses of the SDLT provision that has been in place, and the exercise that we have gone through has been designed to formulate a set of provisions that would be able to be judged consistently and in accordance with the body of Scots law. There will be, of course, reference points to matters. The point that John Sinclair made is relevant here, where terminology which is used in other legislation but is not significantly material to being required to be changed into the terminology of Scots law has been maintained. But our effort has been to provide as comprehensive an exercise as we possibly can do in that process.
Okay, thank you. And finally, just touching on an issue which hasn't come up so far today, but it's on residential property holding companies. The LBTT bill contains a power to allow Scottish ministers to make regulations to ensure that qualifying transfers of interest in residential property holding companies are subject to LBTT. And in your submission you go on to say that the Scottish Government intends to bring forward some minor amendments to the regulation making power. Although in your document you do have some detail on that, I'm just wondering for the record if you can give us a wee bit more information about that.
The provisions here, one of the points is essentially to clarify that the regulations can be made to cover residential properties that are part of larger property holdings. So essentially the issue that we are anxious to ensure is that all possible vehicles that could be constructed in this area are properly taken account of in relation to the provisions in the legislation. And we also want to have the flexibility to set different tax rates and bands for charging the transfer of interest in a residential property holding company, which again we think is a particular device to make sure that all transactions that inherently and philosophically give rise to a charge are actually caught by the charge that is brought forward.
So essentially you're looking there to ensure there's no avoidance.
It's essentially to ensure that the provisions are as comprehensive as they need to be, and that is clearly to ensure that the tax is fully complied with and avoidance is minimised as far as we possibly can do.
Okay. I would like to thank the Cabinet Secretary and his officials very much for the contributions this morning, and indeed colleagues for their questions. We are now we've now ended the public part of our session today, and therefore we agreed earlier to take the next item in private. Therefore, I have a 2-minute break to allow officials and the official report and the public to leave.